I'm Nicolle. I'm a crypto reporter at Bloomberg News. I'm going to be moderating this session today, which hopes to be really exciting. We're tackling the topic of institutions in DeFi, which I think has probably been tackled 1,000 times today already, but we're going to try it again. Do you each want to introduce yourselves? I'm sure you'll do a much better job than I can. Do you want to start, Gaetan?
Yes, sure. Thanks for having me, Gaetan Thabot, head of protocol at Blockdaemon. Blockdaemon is an institutional-grade provider. We do nodes, staking, and MPC solutions for large enterprises. So, large enterprises, what does that mean? Goldman Sachs, JP Morgan, NASDAQ. These kinds of institutions need keys, they need nodes to access blockchains, and that's what we provide with a number of SLAs, basically. So, yeah. And as the head of protocols, I have the pleasure to work with Stella. So this is, pleasure to be here.
Great.
Fantastic. So good afternoon, all. Glad to be here. I am Ankur. I'm head of product at Zodia Custody. Zodia Custody is a custodian institutional wallet infrastructure provider. We're bank-backed, so Standard Chartered, we were born out of Standard Chartered Bank, and we have Northern Trust, Invesco, and a few other banks on our cap table. So very much a regulatory-first, bank-grade institutional custodian. Looking forward to the panel.
Hey, my name is Ben. I'm from Brale. Brale is a stablecoin issuance platform for developers. So if you want to launch a new regulated stablecoin, you can basically use Brale to do that in about a minute for $1, instead of spending a few years of your life negotiating all the bank relationships and building all the technology.
Cool. I'm Priscilla. I'm from the SDF. If you haven't heard of it, you should find someone else in this room. I'm on the partnerships team, and my current focus is on DeFi partnerships and growing the Sorbonne ecosystem.
Great. And if any of you want to ask questions during the session, there should be a QR code somewhere above my head. You can scan that and enter in your question electronically, and we'll get to them at the end. So to kick it off, when we did the preparation for this session, there was a bit of discussion over what we actually mean by the term institution, because it can mean something different to everybody. Mm-hmm. Gaetan, do you want to kind of run us through how you understand the term institution in your world?
Yeah, absolutely. I think institution is a very, very broad term, obviously. I think in our world, what we mean by that is a lot of different cohorts. We have a lot of different cohorts of customers that goes from wallet, exchanges, custodians, trading firms who are typically crypto native. It can be banks, neobanks, fintech. So there's a very wide spectrum of players behind the term institutions. And I think the way I like to think about it is there are some players who tend to be very compliant first, security first, tend to be conservative when it comes to decentralized finance, and others that are a lot more aggressive and a lot more bold and innovative in that space. And so it's playing within that spectrum that I think is interesting, and probably what some of the points we'll touch today during the panel.
Mm. Is that similar to how you understand institutions, Ankur? Obviously, you work a lot more on the traditional finance side than maybe even crypto native.
Correct. I mean, very much so. So that I think covers the broad spectrum of institutions we find. Obviously, in my role at Zodia Custody, we deal a lot more with financial institutions, what most people would identify as financial institutions. However, interestingly, and Priscilla, we talked about this in the prep as well, one of the very interesting use cases we explored with the Stella Foundation last year, I think, involved aid disbursements and organizations such as the International Rescue Committee. So there really is a broad range of participants that should be covered by the definition of institutions, and hopefully that'll come through.
And what about it when it comes to DeFi? How would you define that, Ben? What's DeFi to you?
For me, I just define it as like distributed compute. Sometimes the distributed compute is open, and sometimes the distributed compute is closed. But if it is not distributed, it's not probably DeFi.
What about you?
Yeah, no, I always think about like the activity in DeFi. So like if I'm looking at institutions and thinking about like their approach to DeFi, if you put it on almost like a risk spectrum, right? On one side, it's very conservative. You have your regulated assets, your stable coins, your like tokenized assets, like tokenized RWA. On the more exploratory side, you have things like decentralized exchanges. You have liquid staking, yield farming. And so the traditional FIs, banks, Asset managers will typically play on the more conservative side, whereas fintechs might be somewhere in the middle. And then, of course, you have your more crypto-native, like DAO treasuries, which I still consider as institutions, or certain foundations, or like market makers, for example. They'll play in the more like DeFi-heavy side. They might dabble into different exchanges. And so I think right now when you see this like title, it's just so broad. There's no one-size-fits-all, and I think that's part of the exciting part that we're at now.
And what would you say is the main question you get from institutions wanting to get into DeFi? What is the big thing that they want answered from you when they're thinking about the space?
Do you want me to
Yes,
start?
yeah.
I think top of mind is security. As a matter of fact, 2 weeks ago, I was in New York with a collective called Liquid Collective. We publicly announced a standards and control, a certifications, that basically aimed at filling the gap that exists today when it comes to staking and operating validator nodes on many different chains. That is the gap that you have in terms of certification. So SOC 2, SOC 1 exist, ISO certification exists, but when it comes to best practices in terms of security, going back to your question, there's a gap in the space. And that's the certification that Blockdaemon, Figment, Kraken, Coinbase, with the help of KPMG, PwC, have put forward. It's this certification that allows us to, instead of filling out 700 questions during RFPs, basically say, here is how we manage data, how we manage funds, how we manage private keys, security compliance processes that we have in place. It's a way to speak the language of institutions who wants to interact with blockchains and these types of decentralized protocols. And I think this is the kind of standards and controls that institutions ask us a lot about and want to understand and are really, really getting a lot more sophisticated now today.
Does anyone have a different answer? What are the big questions that institutions are coming to you with, Ankur?
Sure. I mean, I can just add to that. Security obviously is top of mind, especially as a custodian. There is or has been a fear of a lot of the decentralized finance is public, and being out in the public and being in an environment that is inherently trustless is scary for institutions who have until now existed with a lot of guardrails, a lot of centralization, and a lot of regulatory security. And the reason I want to bring that up is when they say security, it's not just the underlying infrastructural cryptographic security, it is also the security that they would otherwise get from regulation and doesn't exist. So they're looking at players and partners that can replicate some of those structures that makes them feel secure and comfortable.
And Ben, would you say that that regulatory environment that Ankur's talking about, is it clearly defined? Is it complete mystery? How would you kind of put DeFi in regulation at the minute?
Well, I work in the United States mainly, and we're a regulated stablecoin issuer in the United States, and that took, probably 2.5 years, maybe a little bit more to get the relevant approvals to start going out and selling the product. And so, from a financial institution perspective, we sort of hear questions like, hey, how does the accounting work? That is not a hard question to answer, by the way. Somehow, DeFi has made that an impossible question to answer, but not by people who understand how accounting works. So you literally just tell the regulators and tell the banks how the accounting works, and they're fine. Blockchains make it easier as long as you don't use DeFi lingo. Sometimes DeFi lingo gets in the way and sort of confuses the hell out of people. I think that the questions we get are just based in very rational understanding. And the misunderstanding I think about the United States is that there's a view that there's not a regulatory climate that is friendly or that is permissible to new stablecoin issuers, for example, which is a total fallacy. It's hard and it's expensive, but the framework does exist. And once you embrace the framework and the institution to ask and you answer the questions, everybody's like, hey, let's go. This stuff is really good. It's actually pretty easy. You just got to answer the question.
And Priscilla, do you find the questions have got more advanced, or in your discussions with potential clients for Stellar, moving from institutions into DeFi, do you find the questions have got more advanced over time, or are they still coming at it with a pretty basic level of knowledge?
Yeah, I think as we start to build out our DeFi ecosystem, we're starting to think about the different users. But I think as it pertains to institutional, they ask us for our partners too, because we're permissionless open source. So that's why we work with partners like Blockdaemon, Zodia Custody, and Brale for them to get that security to be able to use like a permissionless network. And of course, like Franklin Templeton, we've all seen their Benji assets suited on Stellar. So I think a lot more of these questions and conversations are being had, and I think that's why we have to have like adults in the room when it comes to the certain partners we work with.
And like Ankur, do you find you get questions that even go to the root of DeFi, like how do I know who's on the other side of a trade, or how do I know where someone is located so I can file the appropriate bit of regulatory filing to go with this? Like, do you get a lot of questions like that? Is that something you can teach firms how to deal with?
We do, and you get a spectrum of clients. There are a lot of clients who are dabbling in it for the first time, very conservative, TradFi institutions, and yes, there is that element of education. I mean, there was a quote I came across recently. Somebody said that sometimes to people participating, especially to a more conservative institution, it feels that the world of DeFi feels like they are using a technology that they don't fully grasp to participate in paradigms they don't understand, right? So that kind of sums up sometimes how people on the outside feel. But to Ben's point, with that education, when you pare away the lingo and explain it to people, these are familiar constructs, and they see through it.
Yeah, Ben, do you want to elaborate on some of kind of the benefits of DeFi for institutions when you're having those kinds of conversations?
How many people in the room have ever built a dual entry accounting system with a state machine that tracks millions of dollars worth of transactions, or even like millions of transactions a day? So it's a niche problem, but it's a pain in the ass if you've had to solve it. Blockchains like solve for this out of the box. And if they're well designed, they solve for it at costs that are below sort of like the 2 decimal threshold. So for TradFi, this means the technologies are effectively free because the economics of like the underlying treasury can basically buy down the use of the system. Guys, that's how central finance works. And so all of a sudden, we're at a point where the technology is not just novel, it's the better tool for the job. And so it's a great opportunity for developers because suddenly we can choose better tools to build better products that are faster, cheaper, and safer when implemented correctly than traditional systems. Like, wow, why not? That's an incredible time to be building.
But are there markets problems that DeFi can solve as well, Gaetan? Like liquidity, for example?
So actually, if I can, you were asking about advanced questions from institutions when it comes to DeFi, and it made me think of an example which is very recent. A large US asset managers came to Blockdaemon and asked questions about active set of public blockchains. I won't name names. Stellar was one of them. And the question about active set is fascinating to me because I think 3, 4, 5 years ago, I don't think these institutions were asking about, okay, what are the risk mitigation processes I should consider, if not even put in place, when I want to interact with blockchain, public chains. And now they're looking into the nitty-gritty of, okay, who are the operators? How are the block produced? What is the MEV practices on that chain? Really questions that seems really pointed and a lot more, again, advanced, to take the terms that you used, than what we could hear 2, 3 years ago. And I think it just reflects, as an industry, how now institutions are getting into not just dabbling into blockchain, and actually the question is not how institutions are adopting DeFi, it's how they navigate it, right? And now it's really about navigating it versus are they touching it or not? They are. They're already interacting with it. And I find that this example was kind of a reflection of the sophistication of their question today.
Yeah. And Priscilla, how much do you find the work you do with institutions is about making it like user-friendly, so they know what they're looking at when they come to a product?
Yeah, I think like in our prep work, we were talking a lot about like tooling, security, and like, of course, we have to, that's what these guys are here for. But I think that's right. Like, I think when it comes to like front-end usability, it has to be a lot more friendly. I mean, that's like one of the gating factors, and maybe by design in DeFi, but especially when you're talking about institutions, that's absolutely important.
Yeah. Ben, where do you think DeFi platforms themselves can improve on that? Like, where are they falling down in the UX that they need to make it better for DeFi to grow and go mainstream?
I was listening to one of the panels earlier, and the concept of standards came up. And I think it's a relevant topic, but I also think more of it's going to follow the industry than any of us actually want. And so the parallel I have for that is, guys, the real-time payment universe all around the world is still fighting about standards for real-time payment systems. So the likelihood that all of a sudden we get one for DeFi protocols, like naturally without self-organizing, seems like low likelihood to me. But the first thing that I think Stellar does really, really, really well is just be open to collaborating with the community to make every single part of the ecosystem easier to implement. I mean, just like we were talking, you guys are actively doing this all the time, and I think that's step one. Step two is its product. So listen to the customers, integrate it in, and if you do that ruthlessly, the chain's going to get used. It's that simple. I mean, like those two things, I cannot stress enough how important they are.
And like Ankur, how would you say we're seeing institutions show up at the minute? Are they coming to you with a ready-baked idea that they want you to help them implement, or are they coming to you and saying, we need to be in this space, but we don't know how?
So a lot of our clients already have a clear idea of how they want to participate. We are the first port of call because obviously they need a custodian. That's segregation of duties, so it starts at a custodian. The questions that we get more are, once they are with us, once they are custodying with us, what else can we enable? What other participation can be enabled via us, right? So the analogy I often use is a custodian is like a hotel, like a business hotel, right? You're going on a business trip, you look at a hotel. The one thing you want to know is, if I'm going to the Stellar Meridian conference, is the hotel close to it? Or if I want to go visit the Big Ben, is the hotel close to it? So what can I access from the hotel that I've chosen? And a lot of the questions we get are around, okay, we know some of the things we want to do. What do you offer, and how easy it is for us to participate?
I mean, like Gaetan, do you ever find you have institutions come to you with those kinds of ideas and you have to say, maybe that's not the best approach, you should reconsider?
Our stance is we're agnostic. We provide infrastructure for a various number of protocols, probably 70-ish. And our view is we try to meet our customer where they are. We don't dictate or provide advisory services for them as to, you have to pick that infrastructure or that chain, or we're very, very much neutral from that perspective. Yeah, so, but the way they come at us is really around reliability and security. To go back to the initial sort of concept I was using around security, I think this is what they expect from us. They want optionality from custodians and determine what can they do with their assets. But once they do that, they also want to have a certain level of confidence and trust in the technological providers they can use. And that's why we put in place compliance processes. We have these certifications that I mentioned. We have financials that are audited, and all these practices that ultimately will make these institutions feel better. I think a concept that I like to use is, if the regulators are not going to regulate us, we will regulate ourselves. And just anticipate the same way Circle earlier today was saying, yeah, we've put in place a lot of practices that were not required from us because it was not even existent. But ultimately, this is the right thing to do for the industry and for the company. Mm-hmm. And that's, I think, what everybody here is trying to do.
Mm-hmm. And Priscilla, how would you say that the demand from institutions has been over the last year? I mean, we saw a big uptick in attention around the launch of Bitcoin ETFs in January. Nowadays, you know, Bitcoin is still doing pretty well, but the ETFs aren't seeing the flows they were. So how have you kind of seen demand in the space in terms of when they come to you at Stellar?
Yeah, well, I think the Bitcoin ETF is like a matter of time, and I think that'll be a very strong signal for the market. So that being said, I think there are a lot who have expressed interest. I would say I've been with SDF for 3 years in somewhat different roles, but I mean, even the role of tokenization now, RWAs, I think right now it's pretty, the product itself is like pretty vanilla. It's like T-bills, but that's like a first step. Like, you have to start somewhere, and I think like that is more regulated, or hopefully will be, at least like, you know, with MiCA starting somewhere, Hong Kong, Singapore, I think there are regulations around the world that have opened up. So as an institution, if you have the funds and you actually have to put it somewhere, you want to make sure that it's very likely going to go somewhere positive. And so, yeah, we definitely have seen a lot of that. I mean, we can, within our own ecosystem as well, obviously Franklin Templeton, Wisdom Tree, and a number of different like large financial institutions as well.
Yeah, and Ben, have you seen the same for stablecoins as well? Has there been a lot of demand for those kinds of services?
Yeah, I mean, from my position, the appetite for stablecoins is insatiable. It is so deep and so wide and so ever-present, it is impossible to serve all the needs. And there is not enough waking hours in the day to solve them all one by one. I focus primarily on USD-backed stables because that's where we're regulated. We also hold other currencies in reserve and can do some other ones, but a lot of what we see is just demand for USD-backed stablecoins and digital deposits it's insane. Like, if you're in that space, don't spend any time fighting with competitors. Just go serve the customer because there are so many customers. I've never seen anything like it in my life.
Do you think they're wanting to launch their own stablecoins, or are they wanting to adopt ones that are already out there? How are they kind of thinking about it?
I think it's both. I think there are some people that are just like, hey, I got the stable. What do I do with it? Well, now it's interoperable with the regular system, so they just want it to do that. And then there are other folks, like app developers, that are thinking about rolling out their own L3 as like a primary primitive instead of a relational database with a stablecoin on top of it for their balance. You know, those people are always going to roll their own stables at this point once they actually can. I mean, once the speed is high enough and the cost is low enough, we think it opens a lot of opportunities, but even then, they have to be interoperable, folks. Even if you create 1 million stablecoins, it still has to be interoperable with PYUSD, USDP, USDC. Someone has to build that system too.
Do you find that the bridging solutions are happening? I mean, Gaetan, you might know a bit more about this. How much is kind of the world of bridging developing to support the different ways in which institutions are getting involved in various different chains?
Can you repeat your question about bridging?
Yeah, so with institutions getting involved in different chains kind of at different times, different speeds, do you find that bridging is also developing to kind of help that interoperability between the different projects?
Yeah, no, absolutely. I think the bridging solutions out there are facing the same questions from institutions. What is your track records? What are your security practices? How many optionality do you provide? Who are you connecting with? We do see that once an asset has been created, the life of an asset has to be that is going to move. And obviously, it can move on one chain, on multiple chains. That's sort of the path forwards for the industry as I see it. And I think, from an institutional standpoint, they're looking at that movement from a security, reliability, performance perspective, yeah.
We've had a question from the audience, which Ankur, I think you would be perfect for based on our conversations earlier. What is the institutional interest in blockchain infrastructure like staking?
What is the interest in?
Blockchain infrastructure like staking from institutions. How many institutions are saying, we want to touch staking?
So I think pretty much everybody dabbling in assets that can be staked wants to stake, right? Nobody wants to hold an asset that can earn additional rewards or additional sort of yield by staking it, right? There's obviously a risk in it, and there might be some institutions that constitutionally cannot do it, but that aside, anyone holding a proof of an asset that's sort of on a proof of stake chain wants to, we pretty much want, any client with that kind of asset wishes to stake it, I think is the succinct answer to that. So there's a huge demand, and we only see it increasing. Like even with products such as ETPs, there are now staked ETPs, for example, right? So just like money, it's quite a familiar concept, right? Just we hold money in bank, and even when we're holding it, we want that interest. We want to put it to use. We want something to be done with it. And I think it's the same applies in this world as well.
Priscilla, do you find that staking is becoming a more popular topic for you as well?
It's definitely hot in the industry, but Stellar doesn't have native staking, so it's just by design. But I think there are a lot of concepts where we need to meet people where they are. So I think there are certain discussions about how you can use that model to kind of achieve something similar, especially as we start building out like the more DeFi ecosystem.
We've kind of touched on the different ways that regulation is dancing around, I guess, the world of DeFi without directly touching it, and some of the approaches that others have taken, like Gaetan, you were saying about self-regulation in that aspect. But Ben, I wondered if you had any idea of, if you were to envision what regulation of DeFi would look like, or ways in which global regulators could put some rules around the space, what would that look like?
Enforce the ones that already exist. Like in the United States, it's not a question of whether or not the rules are in place, it's a question of enforcement. Regulators are slow to make laws, but they're not slow to enforce if they choose to. And so I do think that, at least in the US, that's a very real thing, that like the regulation is in place. And then there are areas of the world that are like non-G8 countries that they could put those in place. And then there are places like in Europe where we're starting to see more stringent and clear regulation, which I think always really helps. Keep in mind, again, I'm on the boring side. I'm on stablecoins and digital deposits, not creating securities that we don't want to be securities. That's a totally different type of thing, and the way that you sell a product has a lot to do with the way that it's regulated. And I think we've come at it just from the perspective of let's be really thoughtful about how we build inside of the letter of the law and also go to the regulators first to get approval, using the terms and the programs they already understand, as opposed to taking them all the DeFi words, which is sort of like throwing confetti at their face and running away. Like, it just doesn't work well.
And Ankur, how do you find institutions are approaching the everyday issues when it comes to DeFi, things like insurance for the exposure they take?
So I think that's pretty much an expectation at the ground level when they come and work with institutions like us, and I guess Blockdaemon, all of us that are institutional first. That is pretty much an expectation from the ground up. So insurances, security audits, I lump them sort of all together as the core offering. Unless we have that, that is the ground floor of the discussion. We don't get to the next step unless we can provide all those things. So that's pretty much baked in.
I was going to say, what I think is interesting on my side of things I see is there is this kind of dilemma for some institutions, especially who comes to stake with us. We run validator nodes from there, which is meant to secure blockchains. From there, any token holders who pass our KYB can stake with us and confidently earn rewards, being fully insured, etc. And then the dilemma I want to touch on is the fact that there is this idea of performance. We don't like to talk about yield because it goes back to lending and these places that we don't want to be as a non-custodial provider. We talk about rewards and how security is rewarded. And so from a reward perspective or performance perspective, there is this dilemma of what are the practices that you adopt to be more or less performant. And a lot of, I would say the vast majority of our customers tend to say, I'm OK to lose a few points of performance if you can ensure that your practices are as compliant as it can be. A very clear example of that is, are you OFAC compliant? Or on Ethereum, are you using relays that are non-OFAC compliant? And that's a big no-go for us. This is not practices that we adopt or want to nurture, but some of our competitors do. And so obviously there is this dilemma of compliancy being compliant or being performant. And we have to juggle with that, which is, I guess, an interesting space to be right now.
And Priscilla, do you find you get any kind of unique questions or approaches because you're a foundation and the way that you're set up at Stellar versus, all of these companies are private companies?
Yeah, I think for us, we are the foundation, and we do that for several reasons. But I think for us, it's also making sure that we work with the right partners, because you're talking about money at the end of the day. On and off ramping, that's kind of like the heart of Stellar. And so we make sure that whoever is doing that, facilitating that, has their licenses. Us, we're not licensed in that manner, and we don't want to be in the flow of funds. And so that's why for certain partners where we are very strategic about, we make sure that they're regulated in the right way wherever they are.
Ben, what would you say it would take to get the next roll or wave of institutions involved in DeFi? We've had kind of the first big wave with the Bitcoin ETFs earlier this year and that big kind of click moment that happened. What will bring about the next wave?
I'm optimistic. I think it's already happening. I mean, 2 years ago, if a financial institution called me, I might be explaining what a subnet is for the first time. And now when they call, they say they've got a team, and they've already got one built. They know how validator nodes work. They know how signing works. They know how they're going to do it. I recognize there are still a lot that don't. I don't get those calls. I get the calls that it's like, I want to do this. Can we do it? And I am amazed by how informed many of them are. And I think a lot of that comes from the fact that if you think about all the documentation that like Stellar has put out in public, that's the documentation these R&D teams go and study and basically build their prototypes. The number of prototypes that are happening everywhere from, I guess I won't say that one, JPM, like Citi, these huge institutions in the United States, Franklin Templeton, et cetera, et cetera, et cetera. They're actually getting to production, folks.
Yeah, I mean, Priscilla, do you find that it's very useful that you kind of are set up that way, that you put that code base out there, people can build the things themselves with your products? Is that the way forward? Things should be done?
Yeah, absolutely. I think that's where like the innovation comes through. You leave it to the people who actually can build. And I think we're seeing a lot of that. I know we're heavily focused on institutions, but even in the crypto native side, like there's things that I think TradFi can intersect very well, especially in Stellar. You're talking about DeFi, RWA payments. We can be at the intersection of all of that and kind of help drive that. Because I think if you look at crypto right now, it's very speculative. But that's not sustainable. Like everyone's in it for the yield. And like Gaetan was saying, like yield, if you just, it's not something that is like very transparent. And so I think right now when you're talking about like payments, stablecoins, all of these things, we are at a sweet spot where we can actually start to build a little bit more sustainable yield to help drive that, like, I think we were at a roundtable, someone was saying like the next generation of DeFi, but really how do you make this DeFi as we know it a little bit more sustainable and bring in those institutions as well and have the benefits from that?
Because I guess one of the bigger trends that's kind of happening at the minute is institutions coming on board to the idea of tokenizing their collateral, making that more transportable. So not just the yield-bearing tokenized money market funds, but also tokenizing traditional assets that can support lending, support other activities, whether that's gold or gilts or what have you. Ankur, have you seen that be a big conversation for you as a custodian? They want to be able to custody more real-world things that can act as collateral elsewhere in finance?
So we have a lot of what we have seen has focused around the money market funds just because of the institutions we deal in, but tokenization is a big theme for us, and we'll be focused on being able to custody any tokenized asset on public blockchains going forward. In terms of real-world assets outside of the money market funds, we've had some conversations, not a huge, but that's just, I think, reflective of our client base more than anything else. That is just sort of, the use case for all these things over the last few years when I was involved in talks and tokenization was, tokenization comes out of the box. You can mint a token for anything. It's easy. What do I do with it, right? So collateralization and all that sort of stuff was the use case that is now unlocking it to a large extent.
We only have a few minutes left, so I'm going to ask one big question that each of you can then answer. In your perspective, when you're speaking to institutions, and Gaetan, you can start, what do institutions currently think? Is the future of blockchains public or permissioned?
As of right now, what I'm seeing or hearing from our counterparty, institutional counterparty, is it's both. I think the world of interoperability has bright days ahead. I see permission consortium being built. I see private banks building their own chains. I also see a lot of initiatives on public chains. And so I do believe in the next 5 years, both environments will live together the same way for some time the intranet and the internet, which was a public protocols, were living together. So that's what I'm seeing right now. Let's talk about it in 3 to 5 years.
Ankur, you go.
I think both will exist. I think public will remain the driving force. To a point that Ben made earlier, if you view it as a technology, right, it frees up the developer. There's a lot that comes out of the box. So there will be private use cases of it, because you just pick up that technology and take what it offers and put it towards solving private use cases. However, if you want the promise of it, if you want that mass participations that everybody's after, whether it's lending, whether it's any other use case, that will remain in public for some time, but both will coexist.
Mm-hmm.
Yeah, both. I have nothing further to add.
Yeah, I'm boring. I'm going to say both.
Yeah. Okay, all right. Well, thank you all for participating. It's been really interesting, and thank you everybody here for listening. I will pass you back to our host, but have a nice evening.
Thank you.